Smart money doesn't just know what you trade. It knows why you trade, when you trade, how long you hesitate before pressing the button, how quickly you panic during volatility, how your breathing changes when you see a sudden spike against your position, how your confidence collapses after one red candle, how your aggression rises after a green candle. Because every action you take is a signal, and every signal becomes part of a larger behavioral pattern that institutions have been tracking for decades, long before retail ever had access to online platforms, long before smartphones, long before commission-free trading made it effortless for millions of emotional traders to hand over their liquidity on a silver platter without realizing they were feeding a machine designed to anticipate their fear with surgical precision. Smart money doesn't move first. It waits for you to reveal your emotional vulnerability. It waits for the chart to shape itself into a trap that aligns perfectly with your impulses. It waits for the exact moment when your brain shifts from logic to survival mode. Because survival mode is where retail becomes predictable, where panic becomes visible, where the crowd's emotional threshold becomes measurable, and institutions know exactly how to push you past it, with nothing more than a controlled burst of volatility that seems random to you, but is perfectly engineered to trigger the emotional dominoes that lead to your exit. They monitor order flow to see the tension building inside the crowd, the hesitation before entries, the tightening of stops, the clustering of liquidity pockets that form when thousands of retail traders think they're being smart by placing stops in the same obvious areas, not realizing that every stop is a breadcrumb leading institutions directly to the future liquidity they need. They track when retail piles into the same trade because a popular YouTuber called it out. They track when retail sentiment becomes euphoric after a breakout. They track when retail becomes terrified after a 0.5% drop. They track the exact point where fear transforms into capitulation. Because capitulation is the moment when liquidity explodes and institutions can harvest enormous positions at a discount. Panic is not a random event. It is an engineered response created by manipulating expectations, volatility, and narrative timing so precisely that retail traders walk into the slaughterhouse thinking they are walking into opportunity. Smart money knows when to pull liquidity, when to inject liquidity, when to accelerate price, when to slow it down, when to fake strength, when to fake weakness, all so they can guide retail into predictable emotional zones where fear, confusion, and desperation blur judgment and force impulsive decisions that reveal exactly what the crowd will do next. They read your panic through the velocity of your orders, through your sudden shift from limit orders to market orders, through your rapid closing of positions, through your frantic attempts to re-enter at worse prices, through your inconsistent position sizing, through your emotional inconsistency that shows up on the chart as fragmented, chaotic, and exploitable behavior. Smart money studies this chaos the way psychologists study behavioral patterns in clinical trials, turning every emotional spike into a data point that strengthens the predictive models institutions use to stay 10 steps ahead of the crowd. They know that 80% of retail traders reduce their size after 2 consecutive losses, and that 60% increase size after 3 consecutive wins, and that 90% place stops within predictable ATR distances, and that nearly 100% panic faster when volatility spikes during lunch hours, because that's when retail is least alert. They know that retail always expects the trend to continue right when the trend is about to reverse, and that retail always expects reversal right when continuation is most likely. Because retail isn't trading the chart, they're trading their emotions reflected onto the chart. And this emotional projection makes the market feel personal, even though it's simply a massive mirror reflecting the predictable behavior of millions. When smart money drives the price toward your stop, it's not to punish you individually. It's to extract liquidity from the thousands like you who placed stops in the same emotional location. When they manipulate price into a fake breakout, it's not to deceive you personally. It's to activate the predictable FOMO response of retail traders who chase green candles like moths chasing light. When they pull the rug after a sudden pump, it's not because they hate you. It's because they knew the crowd would buy the top out of fear of missing the move. The entire system runs on the expectation that retail will react emotionally, because emotional reactions are universal. They don't depend on culture, gender, age, background, education, or strategy. Fear looks the same in every trader. Greed looks the same. Hesitation looks the same. Panic looks the same. Arguments between logic and emotion always end with emotion winning, and institutions build their entire execution strategy around that simple truth. They push prices into zones where your logical brain still thinks everything is fine, but your emotional brain begins to twitch. And that twitch is the first signal that panic is about to form. They know the exact moment when that twitch develops into tension. When tension becomes doubt, when doubt becomes fear, when fear becomes action, and when action becomes liquidity. They wait for that liquidity like predators waiting for prey. Knowing the prey will always enter the field at the same time, in the same way, without deviation. Because retail behavior is shockingly synchronized even when traders believe they're acting independently. This synchronization creates emotional waves, mini cycles of collective fear and collective confidence that institutions surf with incredible precision. When retail becomes overly confident, institutions sell into them. When retail becomes overly fearful, institutions buy from them. When retail becomes confused, institutions accumulate silently. When retail becomes euphoric, institutions distribute quietly. Retail never sees this happening because they're too zoomed into candles, too distracted by indicators, too obsessed with entries, too emotionally invested in outcomes. While smart money looks not at the chart, but at the reactions the chart will generate. They know retail traders hold losers 3x longer than winners. They know retail closes profits 5x faster than professionals. They know retail adds size at the worst time. They know retail trades more after a win and even more after a loss. They know retail repeats the same mistakes even after vowing not to. They know retail follows influencers instead of the market. They know retail wants certainty in an uncertain world. They know retail feels panic faster than discipline can catch up. And they exploit this predictability through engineered volatility patterns designed to trigger the emotional reflexes that make retail hand over their liquidity right when institutions want it the most. They don't predict what you will do. They let the market pressure you into revealing what you will do. And once you reveal it, it's over. Because the moment your fear becomes visible, your exit becomes inevitable, and your loss becomes their profit. And this cycle repeats endlessly, day after day, year after year, generation after generation. Because human emotions never evolve fast enough to outsmart a system that has already mapped them at a biological, behavioral, and statistical level. Your panic is the most predictable part of the market. It's the fuel, it's the signal, it's the opportunity. And until you learn how the system reads your fear, you will always be part of the emotional herd that institutions guide, trap, and harvest with shocking ease. So if you want to break out of that cycle, if you want to understand the psychological architecture behind every move the market makes, if you want to learn how to stop being predictable and start thinking like the other side of the trade, then make sure you subscribe, like this video, and stay with me, because the deeper we go, the less power your panic will ever have over you again.